All right, guys. SOFI just reported this morning, up 12.5%. Mo, what did they report? Because I didn't really check it out.
So let's go and look.
So the reason we don't have it, guys, is because we don't really pay attention to earnings unless it's really big companies that we follow directly. We believe earnings reports are the fool's way of making a decision on a company. What you should care about is the long-term viability of the business. Whether they beat or miss on any given quarter should not matter to you.
So SOFI reported they lost 5 cents per share versus an estimate of 9 cents per share.
Oh.
And their revenue came in $443.4 million versus an estimate of $425.6 million.
So they beat on earnings and profit.
Beat on top
Sorry,
and bottom
revenue
line.
and profit.
Yep.
Top and bottom line.
Stock's up about 13% right now.
Okay, so the all-time high was February 1st, 2021, $28. Ironically, within 10 days, I think, of the all-time high of Arkk Investments. Did she have any SOFI? I'm sure she did.
That's a great question, and I think I remember she did.
You know what? Maybe she didn't. You know why? The stock isn't down 90%, so I don't think she had it. She only has stocks that are down 90%. See what I just did there?
Oh, Cathie Wood passed on SOFI.
Oh, when?
This was October of 2022.
Okay, so let's see. Where was it? October of 2022?
Here's
$4.89. $5. It's up since she passed on it.
Oh my God. Here's reddit.com. This is June 24th, 2021. It's just a headline. How has Arkk not bought SOFI and Arkk K or Arkk F, whatever Arkk F is?
It's one of their other funds.
That is awesome.
All right. So, guys, I want you to see something. This is our 8-pillar analysis. Not enough data. Not enough data. Not enough data. Negative free cash flow not allowed. Not enough data. Guys, SOFI is not a company we're following, but we're going to use this as a lesson for you guys to learn. Every great value investor, we want to see a long history of the company because it's really hard to change the culture of a company that's so ingrained. Now, you might look at that as a negative. We look at it as a positive. If a company is doing the right things for decades and decades, every new person that comes in is going to be that way.
Yep.
Like, look at us, Mo. If we hired some interns and they stayed with us for 60 or 70 years, they would invest almost exactly like us.
Exactly.
We would teach them. That's why I believe value investing is something that can be learned. It might take longer for some than others, but it is something that can be learned. Right?
Yep.
So with SOFI, let's do some high-level stuff. Negative income, negative PE, negative profit margin, 100% gross margin. No idea how that's possible. Negative $6 billion in free cash flow. No dividend, no return on invested capital, no book value growth. Boom, 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 boom.
The only good thing I'm seeing here is quarterly revenue growth. That's about it.
Okay.
That's good.
Okay. Let's go look at the analyst estimates then. Analysts are expecting SOFI to make 47 cents a share in 3 years. If you apply a multiple of $20, that's $9, 20 times earnings, $9.40. All right, if you want to believe that. But in the meantime, how many shares outstanding are they going to dilute you by?
Oh, and they've been diluting like crazy if you go to the income statement.
Let's see. Quarterly income.
Actually, I don't know what happened here.
It's up, not that much, 12%.
What was it with that 2021? Second quarter.
It does that all the time. I think that's something with our data provider.
Gotcha. Okay.
But I look at this going, okay, so let's look at revenue growth by the analysts. Obviously, higher revenue growth numbers.
Yeah.
And with a high gross margin, then they could really add a lot to the bottom line. But it's going to take a really long time for this company to really generate. And you guys all hear SoFi, the Los Angeles football stadium. It's SoFi Stadium. This is great. Well, guess what? So is FTX on Miami Heat. FTX crypto on LA. I think that's going to end up going away.
Yeah.
Guys, go ahead.
It's a lot of speculation here. This is actually, it's not even a lot. This is total speculation. No one knows where this is going.
That's the problem. I'd love to be able to do stock analyzer tool, but the thing is, we need to have some sort of profit margin and free cash flow margin to assume here. I'm just going to do it real quick. Let's go 20 years out.
I'll go 10 years out.
I'm going to do. Okay, so I'm sitting here. Boy, this is hard. And this assumes, the hard part about this is, it assumes that there's profit today. Because that's what our analyzer tool does. And I'm going to do a high desired return of 15, 20, and 25%. Now, guys, this software, it's been so popular. If you notice, we have no YouTube ads on this video. The reason being is we want to focus on the content. We want to focus on the software. So check out this message from me about the software and how you can get it and how it can make your life much easier. I created the software that you're seeing on the video and behind me because I needed software for myself. This is not something that was created for other people and I use some super exclusive, expensive software. This is the software I use. And even better, we have this community of thousands of people there. And the reason it's so helpful is it allows us to eliminate the emotional fear that makes people make the bad decision in investing. The right investing is 20% about the numbers and 80 or 90% about your temperament and emotion. And that's why it's awesome to have this community. The tools help you on the numbers. The community helps you on how to view your investments and your money. So stop making those terrible decisions that all your idiot friends make when they follow companies just because they like the company. For a little over $1 a day, you can have this entire software package. It'll change your entire future of investing and your money. So sign up now, risk-free, everythingmoney.com. Check it out. All right, so I made some assumptions here. Mo did a 5-year analysis. I did 20-year. I did 5, 10, and 15% revenue growth per year. I did 10, 15, and 20% profit margin and free cash flow margin. That means that 10% of its revenue is going to be profit, 15 here, 20, et cetera. I did 16, 18, and 20 times earnings and free cash flow for that multiple, which is higher than the market average. But since we have to assume profit day one, which is not going to have for a while, I did 15, 20, and 25% desired annual return. Mo, what'd you do?
Revenue. So this is 5-year analysis. So 15, 25, and 35 for revenue growth. Profit margin, 15, 18, 21. Same for free cash flow margin. PE and price to free cash flow, 18, 20, and 22. Desired for return, 15, 20, and 25%.
Okay. I hit the analyze button. So did you.
Yep.
I have a low price of $1.74, a high price of $4, middle price of $3. These are based on my assumptions. Mo, what were yours?
I have $5.25 on the low end, $12.50 on the high end.
Oh, wow.
And around about $8.
Okay. So if you believe Mo's...
Yeah, if you believe these...
But here's the problem.
This is profit starting today.
Profit starting today. And even the analysts don't think they're going to be profitable for a while.
Today. Yeah.
So guys, to me, this is the too hard column. Yeah. I would just wait a little bit, let it become profitable. Yes, you might miss out on some big gains, but I'd rather have I'd rather buy a company that I understood than speculate and guess on where this company's going. Thanks very much for your time. Don't forget to subscribe.